Have you ever wondered how a handful of dollars could turn into a massive fortune? Picture this. Back in 1980, someone took a chance and spent just $220 on Apple stock. Fast forward to today, and that small investment is worth over $553,000. That's not a fairy tale. It's the power of the stock market, a thrilling world where dreams of wealth can come alive. But hold on, it's not all glitter and gold. There are risks and traps along the way. Curious? Let's dive into the secrets of how this financial game works and how you can play it smart. So, what exactly is the stock market? It's not a place where you trade everyday items like clothes or food. Instead, think of it as a giant marketplace for something special, slices of a financial pie called stocks. When you buy a stock, you're grabbing a tiny piece of ownership in a company. Imagine owning a sliver of VinFast, the Vietnamese electric car maker, or tech giants like Apple or Tesla. Why do companies sell these slices? Simple. They need money to grow. They might need cash to build factories, hire more people, or launch new products. To get that money, they slice up their pie and offer it to the public through something called an IPO, an initial public offering. Here's a jaw-dropping example. When Facebook went public, it sold shares and raised a staggering $16 billion in just one day. That's the kind of cash that turns startups into empires. Now, where does all this buying and selling happen? That's where stock exchanges come in. Picture a busy marketplace buzzing with energy, places like the New York Stock Exchange in the US or Hos in Vietnam. These are the hubs where traders shout prices, screens flash numbers, and stocks change hands every second. They're connected globally, from Tokyo to London to Hanoi, forming a massive network where anyone with a few bucks can jump in and own a piece of the action. But how do stocks actually make you rich? Here's the deal. When a company does well, say, it sells more cars or launches a hit product, its stock price climbs and your investment grows with it. Let's go back to that Apple story. If you'd bought 10 shares in 1980 for $220, you'd be sitting on 2,240 shares today, worth over $500,000. How? It's called a stock split. When a stock's price gets too high, like Apple's once hit $656, they split it into smaller pieces so regular folks like you and me can still buy in. Apple did this multiple times, turning your 10 shares into a small fortune without you lifting a finger. Pretty cool, right? But it's not always a straight line up. Stock prices can tumble too. Imagine a rumor spreads that a company's in trouble. True or not, investors might panic and sell, crashing the price. On the flip side, a brilliant idea can send stocks skyrocketing. Take Tesla. When it unveiled its electric cars, investors went wild and its stock shot through the roof. Or consider Snapchat. It raised $3 billion in its IPO, even though it wasn't making a profit yet. That's a bold bet. Some call it a gamble, because if the company thrives, investors win big. If it flops, they could lose everything. That brings us to the risky side of the game. Investing can feel like a roller coaster, huge highs and stomach-dropping lows. Let's talk about a famous crash. The dot-com bubble in 2001. Back then, the internet was the hot new thing, and investors threw money at every tech startup they could find. Companies were valued at billions on paper, but many weren't making a dime. When reality hit and those firms couldn't deliver, the bubble popped. Stocks crashed, billions of dollars evaporated, and the market plunged into chaos. It's a harsh lesson. Stock prices don't always match a company's real worth. They're swayed by hype, fear, rumors, and the mood of the crowd. So how do you avoid getting burned? Here's the golden rule. Don't put all your eggs in one basket. Spread your money around. Buy stocks in different industries, like technology, healthcare, or energy. That way, if one sector tanks, the others can keep you afloat. Next, play the long game. The stock market has its ups and downs. Think crashes like 2008, but zoom out and you'll see it climbs over time. The S&P 500, a key US market index, has grown 10 times bigger in the last 50 years, despite all the drama. Patience pays off. And here's the best part. You don't need a fortune to start. A few dollars can get you in the game. All it takes is understanding how it works. The stock market is a wild ride, but it's one you can master with smarts and grit. It's not about being rich already, it's about starting small and dreaming big. So, what do you think? Ready to dip your toes in? If you loved this deep dive, hit that like button, smash subscribe, and stick around. I've got more investing tricks up my sleeve to share with you.